good morning, and welcome to the VSA Capital 5-Minute Morning Miner on Thursday, the 4th of September. Morning, Paul. How you doing?
Well, thank you. And how are you?
Yeah, no, I'm fine. Right, let's get cracking. There's a couple of, at least a couple of quite interesting stories out today, although the first one I think we should talk about is Tungsten West. They've had their final results. I mean, the final results don't really mean an awful lot. There's a lot of news going on here. But Paul, why don't you just quickly run through what the results do tell you?
Yeah, the main thing is it's a period demonstrating the restructuring essentially of what was Tungsten West a year ago, as of the end of March 31st. Took a loss, a substantially larger loss, 22 million sterling, and it only had 18,000 in cash at the end of March 31st. But it's all about what's happened since. So we'll see in the new interims when they come out just how much change has taken place as well. In this point here, though, making the statement as to all the things that they've managed to achieve as far as working on the restructuring of the corporately, plus the material point, I think, too, is during the period, the Hammerton deposit was declared a strategic, critical raw material project by the European Commission. So that means that there is regional backing from multiple nations in order to make sure that Hammerton gets refinanced and put to production, I think.
Yeah, I mean, anybody listening to this regularly knows that we talk a lot about tungsten. Probably in London, we know more about tungsten than any other investment bank. Probably know more about tungsten than any other investment bank in the world, let alone London. The key to this whole company, actually, of course, is the convertible loan notes and Lansdowne partners that have, effective control to a certain extent of convertible loan notes. It's not quite as simple as that. Because there are rights for minority convertible loan note holders. But we've now gone through tranche A, B, C, D, E, F, G, H. I think we're probably, hopefully, not going to have another tranche of convertible loan notes, because they actually will have to be converted by the end of the year. But that conversion is not simple either. In fact, they're very, very complicated loan notes. I can tell you, I am a loan note holder, and so I've obviously spent a lot of time looking at it. I mean, the document putting it together was, just to put it into context, massive. Cost about £300,000 to put together. So I would just warn anybody playing the equity, do tread carefully, because this company basically is all about the convertible loan notes. But tungsten's a hot commodity at the moment, so you can see why the share price has been rising. It's off a penny today at 10p. So let's see where we go. It's going to be a very interesting final 4 months for this company, because a lot of things need to happen before the end of the year. Right, the other one I wanted to catch up on, actually, and it has a non-exec in common, is Metals X, or Metals Exploration, which obviously is actually. Have you commented on Metal Exploration today, Paul?
I haven't talked on it yet today, though.
No.
But
I think I haven't gone completely mad. But they've had interims, and this obviously was the Philippines gold producer, and then they bought out Condor Gold in Nicaragua, and they're now starting to develop that one. Clearly, because the gold price has been going strong, it's performing very well, isn't it, Paul?
it is. I think the big point is around metals exploration is such a nice example of how much higher gold prices and change in operating and corporate management over the last 3 or 4 years has turned around this company essentially successfully, such that the balance sheet looks so much better now. Company is now fully debt free. If you shareholders or long suffering shareholders would remember, this had over 80 million in debt just a few years ago, and was loss making, even though the grade of the Runruno mine as operating was significantly higher than now. Revenues came in on the interim at 118 million, with a profit over $16 million for this half year period. The They mined 1 million tons of ore at a grade of 1.5 grams per ton. But the other interesting point, too, managed to improve the recoveries from the mill on this ore by a good 2 percentage points. So now at 91.4% recovery here at this point. So they did have a small impairment charges, but even still, the first half EBITDA came in at 72.3 million, and they as are in a position, given these strong cash flows now, that they can finance this 40,000 meter drill program on the wider Condor exploration tenements around the La India mine in Nicaragua. So just making real good progress here, it looks like.
Yeah, I think you got to give credit where credit's due. The management has also done a very good job here. So it's become, I would say, a mainstream sort of mining company that generalists could own actually in the market, because there aren't that many what I describe as mid-tier, because I think mid-tier is probably the right word for it. It's no longer a junior mining companies that are appropriate. So yeah, Metals Exploration, or Metals X as it's known, is one to keep an eye on, so to speak. What else do you want to talk about, Paul?
Just some real quick mentions on a couple of other London quoted things. First of all, Savannah Resources gave us an update on the work streams for the Mina do Barossa mine development in Portugal. Main points here to show is that they pointed out for investors that the lithium price has risen by about 60% since the end of May, and that is certainly going to help as they arrange the final capex guarantees to develop Mina do Barossa. And the German government has committed over the last period, several weeks, for a loan commitment of possibly $270 million US, which would cover that capex for sure. So nice update there from Savannah.
Also, I know Empire had a bit of news out this morning, and they're up about 11% this morning. So you better comment on that one, Paul.
Yeah, Empire Metals, that's the one which is exploring the mineral sands and sandstone in West Australia that's London quoted. Their interim results showed a loss of 1.7 million sterling, which was worse off by about 350,000 sterling. Cash position, though, was still pretty healthy here, 6.3 million cash, and they did raise 4.5 million in sterling in a placing during the interim period. So there is a lot of backing on this stock. Even so, given the fact that the apparent size of this deposit they have in West Australia is really quite significant.
All right, thank you for that, Paul. I think that's about it, isn't it?
Yes, I would say so.
All right, very good, thanks. And we'll be back tomorrow.
Very good. See you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.